And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. I'm Ladi Williams, and happy new month. Great to have you join us for the first episode of this month. Well, today we'll be talking renewable energy and solving Nigeria's electricity problem, plus rising inflation and how it's affecting the insurance industry. But first, let's take a look at the oil market and some business news. See, oil prices edged up in early trade today after sinking in the previous session as OPEC Plus said it would stick to its planned oil output hikes in August, and investors were worried about the strength of the global economy. Brent crude futures rose 83 cents to $109.86 a barrel, while WTI crude futures for August delivery rose 70 cents to $106.46 a barrel. Prices fell around 3% yesterday. Well, U.S. traders squared positions ahead of the long 4th of July weekend. Thursday, the OPEC Plus group of producers, including Russia, agreed to stick to its output strategy after 2 days of meetings. However, the producer club avoided discussing policy from September onwards. The Nigerian Midstream and Downstream Regulatory Authority has reacted to allegations made by the Independent Petroleum Marketers Association, IPMAN, on fuel scarcity due to non-payment of bridging claims. According to the regulatory authority, the federal government has paid about 74 billion naira bridging claims to oil marketers as of June 2022. A breakdown of the payment shows that about 9.95 billion naira was made to the major oil marketers of Nigeria as moment, while IPMAN received over 42 billion naira. The NMDPRA further assures IPMAN that the authority would continue to make payments of outstanding claims to promote seamless operations. And the federal government has guaranteed over 1.2 million loans worth of 130 billion naira under the Agricultural Credit Guarantee Scheme Fund from its inception in 1977 till date. Of the over 1.2 million beneficiaries, less than 1 million of them have repaid over 98 billion naira, representing a loan recovery rate of about 85%. Speaking at the event in Abuja, the board chairman of the Agricultural Credit Guarantee Scheme Fund explains that the intervention aims at achieving food security for the nation and generating forex exchange earnings for the government. Do take a listen.
Under the new Act, the maximum for a non-collateralized loan has increased from 20,000 naira to 100,000 naira, and the maximum for the collateralized loan from 10 million naira to 50 million naira. Furthermore, the SCGSF amended Act show that complete agricultural value chain financing is now allowed. Under the scheme, which includes the financing of production of farm machinery, production of implements and equipment, processing, storage, and transportation, as well as any purpose connected with activities within the agricultural value chain. To further encourage participants in the scheme, the board last year approved the increase of the interest drawback rebate for farmers and participants in the agricultural value chain from 40% to 50% to cushion the effect of COVID-19 pandemic and to also encourage more participation.
And now to our first conversation. Report from Stairs Business on Nigeria's state of power, talking about electricity, shows Nigeria is one of the lowest electrification rates in the world, with about 43% of the population with no access to grid electricity. Well, to discuss the report, we have joining us Michael Famarati, co-founder and head of intelligence at Stairs Business, and Dele Fashimo, around group head oil and gas at Sterling Bank, both join us via Zoom. Great to have you both on the program. All right, let me start with you, Michael. Quite an elaborate report on the state of power in Nigeria. Tell us about the key findings in your report. Hello, Michael. Hello, Michael. I don't know if you can hear me.
Yes, I can hear you.
All right. So did you hear my question?
No.
Okay,
Now
so yes, talking about the report on the state of power in Nigeria, I want you to tell us about the key findings for the report.
Okay, all right. Thank you very much for that, Laddie. I think the first thing that the report does essentially is provide a structural assessment of Nigeria's electricity issues, and it puts that in context, right? So it looks at issues, first of all, from trying to understand the electricity demand gap. So one key finding from the report is that in terms of electricity generated in Nigeria, although the national grid provides about 4 gigawatts on average, Nigerians by themselves generate over 40 gigawatts a day, which just shows that captive generation accounts for over 10 times what the grid can provide. And for us, that's important because in terms of substitution, it's very likely that a number of households and businesses that have relied on petrol or diesel generators for the last 10 years are increasingly looking at solar. So that 40 gigawatt number gives us a sense of even the current market size before we even begin to discuss the potential for people who aren't connected to the grid or don't have any form of self generation. So I think that that's a very important starting point for understanding the need and use of solar in Nigeria.
Right, and let me come to Dele now. Dele, the demand for electricity will continue to grow, with population growth and, increasingly complex energy uses. What do you think we should be doing and the government should be doing right now?
Yeah, absolutely right. The demand for energy will continue to increase, driven by what you mentioned, population growth and advances in productive activities across the world, and particularly Nigeria, where the need for industrialization is even much higher. What the government should be doing include, part of what they are doing right now, which is within the economic growth plan of the country. It's already embedded how to increase energy generation and access to electricity generally for the people. However, one thing that needs to be scaled is increasing focus on off-grid sources. As we all know, the situation of the grid in the country requires a lot more investment, which it's not very certain that would happen anytime soon. And of course, the off-grid sources present a very viable opportunity for the country to meet the energy and electricity requirements of the country. And indeed, when we're speaking about off-grid, we're not referring to the use of fossil fuel-powered generators, which on their own could be referred to as off-grid, but we're referring to off-grid sources that are renewable and scalable, and this is something that is already being tested. So that's what we're advocating the government should pay more attention to, especially now.
Right, and with the war in Ukraine, Michael, oil and gas markets have been quite volatile. Rising energy costs, that's also stoking inflation. We've seen diesel selling in Nigeria for about 800 naira, per liter. But this renewable energy should be shining at this point.
So to put it in context, diesel prices have tripled since the end of 2020. Just showing the extent of the price rise up. And it's really interesting because the price of solar has been going in the opposite direction. So in the last about 13 years, since 2009, the cost of solar modules have gone down by about 95%, right? And that actually beats the target set for 2025. So what we're seeing is while the price of petroleum products are going up, and we also expect the price of grid power to go up over time as tariffs become more cost reflective. On the solar side, costs are declining as the technology matures and as businesses figure out models that are sustainable for customers, right? So, for example, we've seen the use of BMPL solutions more and more in Nigeria. as businesses try and find a way to help people deal with the high upfront cost of solar, because that remains the only real financial barrier for people accessing solar in Nigeria.
Right, and Adele, give us some real-life case studies or examples of large off-grid solar projects.
Thanks. There are a couple of those already in the country. If you go up north, you will see large solar installations powering federal government universities. A case in point will be the Behaviour University in Kano, which has a combined hybrid install capacity of about 7 megawatt powering the university community. So that's a classical example, and there are a few other institutions like that and other commercial and industrial type examples that we have seen. This goes to show that solar can actually indeed generate the required energy for commercial and industrial facilities. Certainly, solar is able to power residential and other household requirements for energy. So that's what we're seeing.
And Dele, cost is another matter, when it comes to using alternative sources of energy. What are the financing options for, solar energy solutions for, say, households and businesses?
Thanks for that. There are a number of financing options that are available within the financial market, particularly with Sterling today. And I would like to begin with, the later part of your question, which is what's available to households and small businesses. Today, there are at least 3 financing options. Indeed, consumers can acquire those assets by themselves. We've got listed with us a number of technical partners who will then deploy and help maintain. There are other 2 financing options which include direct, loan, which we call lease to own, which is something that Nigerians are generally used to, pay as you go, and then you can pay over time between 24 to 48 months, depending on the income levels of the individual. There is also the beautiful one, which is power as a service, in which case consumers or buyers don't necessarily have to own the equipment. The assets can be deployed to your office or to your home locations. You sign a renewable energy uptake agreement, agree a fixed monthly charge, and you continue to enjoy your constant clean energy supply over the life of the contract that you may have signed with such providers, including Sterling or any of our affiliates. So this way, we are able to help people beat the barrier of initial outlay or the acquisition cost, which we see has become a major impediment, but we are already solving for that. On the corporate side, for businesses, there are financing options that are also available, either through commercial banks or through any of the federal government-sponsored financing initiatives. There is the Solar Power Niger Project Fund, which is managed by the CBN and the Rural Electrification Agency. There are 2 different funds managed by the REA, again, provided by the World Bank and the African Development Fund, or bank rather. So these and various other initiatives with development agencies and partners coming into the country to help move the needle when it comes to energy access. And most of these loans that I've mentioned, just to encourage uptake, come at significantly subsidized interest rates and relaxed collateral conditions, especially if you are speaking with the right bank, like Sterling.
But Adele, with rising global inflation, that we're seeing right now, is there a risk that, the cost of solar will actually go up as we're seeing rising prices of everything at this point?
You're right. That remains a concern. However, the way this is being solved, again, because what is happening, what really makes that happen locally is the translation costs, because for now, a lot of the components are imported. Like Michael mentioned, globally, prices of components are actually declining with increasing uptake, with advances in technology supporting the production. However, locally, once you import, given the current exchange rate, local realities, you see an uptick in the price. However, there are a number of businesses that are looking to set up local manufacturing plants in Nigeria, and these in the medium to long term will actually help remove the import component, and we can truly enjoy the significant savings coming with improvements in technology and the international prices of solar components.
Right. All right, Michael, let me come to you now, Michael. Can you paint a picture of the impact of Nigeria's electricity problem, from the household business to the macro level?
Yes, I think that's important. So just here are a few statistics that, put in context, right? So first of all, less than 50% of the Nigerian population is connected to the national grid. But even within that number, most of them are urban consumers. So in rural Nigeria, you have an electrification rate closer to 20%. Now, when you even drill down here, you find that of the people that are connected to the grid, just about 40% have meters, right? So most of the people who are plugged in still suffer from, still aren't able to calculate their bills accurately, right? Now, you then move on to the business side, right? The World Bank did a survey a few years ago looking at infrastructure across the world. And when it came to the number of hours of power outage across the world, Nigerian businesses face the most. On average, Nigerian businesses suffer 380 hours of outage each month. The next highest country was Congo with 235 hours, right? So that just shows how far ahead of everyone that we are in this area. Finally, when you look at the total cost of Nigeria's power prices, it was last estimated at 10 trillion naira a year. Now, that is roughly $25 billion or 2% of national GDP, right? So again, that just puts in context the size of the problem for Nigerians every day, both in terms of businesses and households.
And what would you say are the limitations to solar adoption in Nigeria?
I think the main thing here remains still making sure that operators are able to roll out sustainable business models to allow to access solar, right? So we've highlighted the upfront cost problem already. And I think, again, that's important for operators. And we are seeing solutions. And again, this is where Sterling and other financiers coming. It's important that there are financial solutions to enable solar access. I think beyond that, though, when you then look at the industry, it's still very highly reliant on imports, and that's something that Gile highlighted earlier. You look at the talent available for solar companies, and they're not exactly many, right? So what we should be looking to do over the next 10, 30 years is really build the local base for a thriving local solar industry, because right now the industry is mainly a bit of assembly and then a lot of distribution, right? But that then means that the value chain is highly reliant on import, and given the FX situation, we know how volatile and vulnerable that makes the industry as a result.
Right. I guess in Nigeria, we need to get that perfect mix, for electricity generation to actually surmount most of these problems. I want to thank you, Michael Famrati, Head of Intelligence, co-founder, Stairs Business, and Dele Fashimo, Group Head, Oil and Gas at Sterling Bank. It was great having you both.
Thank you.
All right, now, so after the break, we'll look at Nigeria's insurance industry in the face of rising inflation. What's next in that segment? That's in a moment. Do stay with us. This is Business Morning. Welcome back now to our next conversation. Reports by PwC estimates that businesses may see a price rise of between 10 to 20% in the cost of their annual insurance bill. Firm said that this was the direct result of a rising consumer price index, which has significantly increased the cost of materials and labor on the settlement of claims. Let's discuss this now with Olushola Oguni, lead advisor at Finit Advisors Limited, joining us right here on the studio. Good morning.
Good morning. Thank you for having me, Ladi.
Great to have you. So, looking at this report now, how would you describe the relationship between rising prices, that's inflation, and the insurance industry?
Thank you very much. As we all know, inflation affects people differently. In a rising inflation period, it tends to affect the creditors more than the debtors. So if I'm owing you money, when I want to pay you and the value has dropped, you lose, I gain. So basically, so for insurance now, it affects the industry in different ways. It affects the insured, which is the people buying insurance. It affects the insurance company in different. So let's look at the insurance company. In a rising period of inflation, the claim payment, especially repairs, tend to go up. Take, for instance, auto insurance. You want to repair your car. You have a sum insured fixed at the beginning. But when you have repairs during the period, you tend to pay more. The only period that insurance could enjoy during rising inflation is when you have a total loss. 2 million, January, you insure your car, for instance, stolen in June. You pay 2 million, but inflation has eaten into it. Right. But if you don't have a total loss, let's say you have a repair of, let's say 300,000 naira. Without inflation, that could have been like 200. So insurance suffers for that. However, for the insured, they also suffer from life policies. Life policies, when you buy life policies, especially whole life, you keep making payment, and inflation, just as what is happening in the pension industry, inflation is eroding your purchasing power. So when you're doing life policy, you tend to suffer. But if you do a term assurance, for instance, like say 1 year or 2 years, you could be better off. So it affects people differently. There are protections you can use. You could negotiate for a kind of hedging or insurance clause that I want my claim to move with it. It could be expensive. That means you have to pay more premium. Right. So it affects people in different ways. So
that means we could actually expect rising premiums at this point?
Yes. In short, the insurance companies are actually complaining. They are having more rising claim due to, if it's a property insurance, for instance, you tend to have cost of building materials going up. You suffer fire incident. When you want to buy those things back, you could have cost to close like maybe 50, 70 or 80%, way above the average inflation rate, The average is just what we are seeing, about 70.7, but cost of building material within the last 6 months, you could have 70 or 60%. So that is a minus for the insurance company.
Quite interesting. Well, how would you describe consumer behavior right now in Nigeria towards insurance packages?
Thank you very much. This is quite interesting. Insurance is a very unique industry. For instance, for every 1 naira you pay for insurance, it goes through several stages. From that 1 naira premium, if it goes through a broker, an agent, it takes a commission. If that money goes to an insurance company, it caters for its own expenses. From that money, he wants to make profit. From that money, he wants to give regulators some fee. From that money, he wants to pay the insurance premium. So, it is unique. The behavior of consumer for insurance has not been too good. People don't actually want to do insurance due to several factors: culture, religion, and people do not see value in it. And it's not good enough. So the behavior has not been good. The awareness by the regulators, the industry association like NIA, NCRIB, they've been trying. However, that behavior has not moved the needle, and you can see the behavior in the insurance contribution to the GDP. Less than 1%. In South Africa is about 14.3%. In Kenya is about 3.4%, which is low. So insurance penetration is low. Insurance density is also low. An average Nigerian spends like $8 on insurance. In South Africa, it's about $800. In Kenya, it's about $43. So behavior is not there. So people need to see the value in buying insurance. If I may ask you, Ladi, what will make you to buy insurance?
As long as I can, make my claim and I get it.
Good. So I think the insurance company are listening. So long as you can get a claim.
On time.
On time. Good. So we had, let me just give you insight from of our survey. We asked people, do you understand insurance? Almost 100%, 95%, some states in Nigeria, they say yes. However, we asked them, in the last 3 months, and this survey was done in March this year, in the last 3 months, who has talked to you about insurance? They said, on average, about 70% said nobody has come to them to talk about insurance. So buyer behavior is also influenced by lack of maybe awareness. And some said, even if they talk to them, they don't know what to buy. Insurance is complicated. You need somebody to explain it to you. To be aware is no, you don't know about it, and that's sad. So people, the insurance behavior can be shaped from the policy angle. It should have a political prioritization that, hey, it is an essential part of the modern economy. It's bread and butter.
Right. And, we're seeing rising inflation at this time, and central bankers globally are trying to, tame inflation by raising rates. And there's also that risk of, a recession. And I'm wondering, what is the role of insurance in a slowing economy?
Interesting. Generally speaking, when an economy is slowing down, economic is not expanding, so that could also be seen on the insurance industry. So you see people tend to reduce their purchase of insurance. However, the insurance may actually pay more claims from policies like loss of employment income. Loss of income, you lose your income, you lose your employment and you don't have money, so you can actually get that. However, I will advise people in a slowing economy, that is the best time to protect your assets. Because suppose you are not making more money, you have some savings, you have some assets.
And your disposable income is being squeezed.
It's being squeezed, and you suffer a loss. You go to square one, which is always one. So what do you do? Protect yourself, even in a slowing economy. Protect your assets. So when the economy expands, you get by. As a matter of fact, in some countries, they actually take a loan to pay premium. It's like you have a house value at 10 million naira, for instance. A small house, an average house in Nigeria, 10 million naira. 20,000 naira, max. You should insure the house for fire, for burglary. So you sleep well. In a slowing economy, people should try as much as possible to protect their assets.
But what about the insurance companies? Aren't they impacted by a slowing economy?
As I mentioned earlier, the premium rating drops.
Right.
And that tells on their underwriting performance. And if they have more claim, that could show on their claim ratios, the administrative ratio, or the general combined ratio. So everything, those ratios could increase. So it tells on them.
Recently, we saw NICOM revoked licenses, of some companies. How do you see this regulatory action?
Well, that regulatory action is a step in the right direction. Actually, last year, April 2021, NICOM also canceled the license of Unique, if you remember, Unique Insurance. So what NICOM has done is backed by law. Both NICOM Act 1997 and Insurance Act 2003. Section 8 talked about the cancellations of those, license if they are not able to meet most time solvency ratio, they cannot continue to operate. So what they did is to kind of instill confidence in the industry, ensure that, okay, you don't continue to do business because they cannot obviously turn corner. And they've written them in March to come up with a plan of action, how you want to solve the deficit. There's a deficit in their financial performance. They cannot undo that. So the best bet for the NICOM is to, it's like you minimize their loss. What is minimization of loss? So those companies are in receivership now. The receivers take a look at new scenario.
So what happens to the customers of those companies?
Yeah, the customers are fine because, one, the companies have stopped taking business. They can't take further business so that that will not complicate matters. The existing customer, especially those who have life policies, which surrenders value and all those that, so they will be well catered for. And interestingly, there is a section in Insurance Act, Section 78, if I'm not mistaken, is also in an ICOM Act 1997, Security and Development Fund. That fund, according to Insurance Act, states that in the event of some companies being insolvent, unable to continue to trade, when the receivers have exhausted or the available resources, look at their asset and liability to balance things up, the Security and Development Fund will actually be triggered to take care of the customers. And that fund can also be used for, people don't know this, uninsured vehicle or car that knocked down third party. Yeah, it's there. It's in the act.
Quite interesting.
Yes, so it's in the act. So the customers are fine. NICOM has done the best bet. Is a confidence boosting for the industry. Minimize their loss, ensure that those who have the capacity in the industry can actually trade.
Okay, let's talking about risk management. At this point, what other options are there for consumers? Just putting insurance aside at this point.
Well, thank you very much. For a emerging market like Nigeria, insurance is still the best bet for retail.
Okay.
People should ensure. We have 5 compulsory insurances in Nigeria, and those compulsory insurances are from liability policies, meaning that if you do something and you are not able to, your legal liability to a third person, you don't have money to do that. Just buy like motor vehicle third party, like buildings under construction, more than 2 floors, like insurance of public building, like group life for employees, and like healthcare insurance, professional indemnity. Those are the key 5, apart from aviation. But other risk management measures we can talk of is like, say, self-insurance.
Self-insurance.
You can do self-insurance, but you must be careful. Before you do self-insurance, you must have an assessment of your risk profile. What are you exposed to? What are the frequencies? What is the likely impact in financial terms if those risks crystallize? So you look at those. The best bet to do self-insurance is look at those risks that have maybe high frequency but low impact. You don't want to self-insure an aircraft, for instance. The government will not even allow you.
Right.
So you can also do what we call alternative risk transfer. It's common in advanced market. It's coming to frontier and emerging market too. Insurance, there are some risks that the insurance industry will reject. Either they don't have the capacity for it, either the reinsurance, because insurance do reinsurance. The reinsurance say, we can't do this thing. Maybe they don't have data, the actuarial calculation has not been okay to generate that. So they can do alternative risk transfer, whereby you take the risk to a place that you can protect yourself outside insurance. And you can as well do captive. Captive is also a form of self-insurance. NNPC, LNG, they have captive.
Quite interesting. Well, I guess the insurance companies have, a lot. The job is cut out for them at this point with all the, global headwinds we're seeing, right now in the world with the war in Ukraine and rising prices and all of that.
That's right.
Anyway, thank you so much, Olushola Oguni, lead advisor at Finite Advisors Limited. It was great having your perspective on the show today.
Thank you very much, Ladi.
Thank you.
Thank you for having me.
All right. Yeah. All right, we'll take a moment now. When we come back, we head on to the markets. Do stay with us. This is Business Morning. Welcome back. Now let's head on to the markets. We have Ini with the details. Ini, thank God it's Friday.
Yeah, thank God it's Friday. Let's see if the market is saying the same, but that will be at the end of trading today. This is for yesterday, and we see that the market is still, going a bit to, that's the equities to the green, but very marginal. There's 0.03 yesterday, but at least it's in the green. I don't think Ladi can say that about the crypto market at this time. Equities is 27.93. We haven't regained that 28 trillion naira yet, but we're really close, 27.93. Hopefully at the close of trade today, we would hit that back. Value was the only positive yesterday. It was 3.87. That's about, I think, 12% more than it was the previous day, while deals was about 50%, 40-something% less than the previous day. That's it. And then banking, well, is shining. Insurance and oil and gas. FBH Holding has been really pushing the sector. The other day, FBN Holding couldn't push the sector, the counter to the green, but at least they succeeded yesterday among some other financial services. Consumer goods and industrial goods were down yesterday. Insurance really very high up there, as well as oil and gas. Seplat gained 10 naira yesterday, so no surprise that we see oil and gas in the positive. There were top trades yesterday. There you have it. FBN Holding really doing well, and then UBA, the financial sector, and then Transcorp finds its way into the top trades. The unlisted market, unchanged, positively unchanged, but still retaining that 1 trillion naira. I mean, it's a big question to know how they've done that. I think it's getting to like 5 trading days now, and they're still on 1 trillion naira. They only had 7 deals yesterday, valued at 1.11 million naira. And the fixed income market, we're expecting some movement here. Hopefully that the FAC liquidity is going to make something, but we see that yields has been unchanged for about 3 days now. But I think we have Bosun Obembe now joining us, Access Bank fixed income dealer. Perhaps he can answer that question. Hi, Bosun, good morning.
Good morning, Hini. Thank you for having me.
Good to have you. So let's start with the auction. I think there was an auction 2 days ago. How did that go?
So at the auction, nothing really changed. There was 175 billion on offer across the 3 tenors. We were expecting the rate to actually go up. However, on the 364-day bid, the rate remained stable at 6.07, and on the mid-end too, the rate remained stable. The only tenor where we saw a decline was on the 91-day B, where we saw like a 9 basis point decline from the previous auction. Because this week, like you mentioned, there's been a lot of illiquidity in the system. Market has been expecting the FAC inflow about 450 billion to come into the system. We've been expecting it since Wednesday. It didn't really come. It didn't come yesterday. So we didn't really see a lot of interest. However, the DMO oversold about 23 billion from where the plans were. So on the secondary market, nothing really is happening. That's why you've seen the yield has remained relatively stable and unchanged during the week, because what drives the market is the liquidity, and the liquidity is not there. If you look at the system liquidity, system has been in a repo position of over 400 billion. So even when the FAC comes in, we expect it to actually just to take out the repo.
Exactly, because I wanted to ask, I mean, we've been talking about FAC, we're expecting it by a week now. How much change can it really make? How much change, how much movement do we expect it to bring to the market?
So when the FAC comes in, that is when we now, because most banks, where they are funding their transaction at the moment is from the CBN window. You know, most customers, they have a tax payment for June. So there were a lot of outflows from the system, and we didn't really have a lot of maturity into the system last month. I think we just had like 300 billion that came into the system. But with the FAC coming in, that will be liquidity injection into the system that will help bank from to hit their fund instead of having to go to CBN. They can actually self-fund. But this month, I think, is a very good one. We have a lot of maturity coming to the system. We have the Omo maturity next, about 20 billion. Throughout the month, about 80 billion. Maturity. We have NTB about 400 billion to actually come into the system. We have coupon payment as well coming in this month. So this month is going to be a very good month. We have on 2026, 2030, 34, 42, and 40. So about 220 billion coupon payment will come in. So I think this month we'll see some a reversal we'll see some buying interest coming to the system.
Yeah, but so, because obviously even in the NTP, we also have some maturity coming in in August, in November. So I guess in the next couple of months, we should expect a lot of activities in the markets.
Yes, that's correct. We'll have a lot of activity.
All right, Bosun, thank you. Go ahead.
So I was saying that we have activities this month because you know what drives the market is liquidity. So FAC is coming, and we see banks trying to replace some maturity that they have. So at the NTB auction, the NTB is not going to have much impact because usually it's in and out. So you have something coming in, then DMO will conduct another auction that will take out that maturity. But what we actually hate is the bond, the coupon payment that will come in. That will actually help activity this month.
All right, Bosun Bebe, thank you so much for that analysis today, and do have a profitable trading day.
Thank you. Bye.
Bye-bye. So, Ladi, there you have it. It's looking a bit bright. It's already looking bright in the equities. The fixed income is looking bright with this liquidity that's been expected, maturity, and the FAC liquidity that should boost some activities in the fixed income space.
All right, fingers crossed for the weekly close for this week. Thank you so much, Ini. All right, now let's head on to London. We have Juliana right there in Ireland for the Nigeria-Ireland Trade Summit. Great to have you, Juliana. Good morning. Give us a sense of the conversations being had at the summit.
Good morning, Laddie, and good morning, as you correctly said, from Dublin today, not from London. I've crossed the Irish Sea to attend the second day of the Nigeria-Ireland Trade and Investment Summit, a decent summit, quite large, I must say. They've got some significant members of the Nigerian federal government being represented here, as well as Ireland. And now we just got here about an hour ago, and there's a pretty, I would say, robust panel discussion taking place with some private sector CEOs from Ireland and Nigeria. Really interesting in harnessing this pretty historic relationship that goes back at least 200 to 300 years. We are in very different trading times, aren't we? We've got post-Brexit relations that significantly affect this small island, as well as post-COVID. A lot of companies now and a lot of countries are looking to Africa. And unlike the United Kingdom, that have, I would say, a rather strong, solid trade relationship, that is something that this summit is hoping to achieve between both nations. I think one of the comments that was made on the panel that's currently taking place right now is agriculture. Agriculture is a sector that both are very familiar with, and both would like to harness that even more. So we've got lots to expect from today. Who we are expecting, I haven't seen anybody yet because we literally just got off a plane a couple of hours ago, but we are expecting to see potentially the Minister of Communication and Digital Economy, the Minister of State for Petroleum, the Minister of State for Industry, Trade and Investment, and of course, Her Excellency, the Nigerian Ambassador to Ireland, and her Irish counterpart. So lots going on, really important times, and a significant trading event that's taking place across the United Kingdom pond.
All right, great, Juliana. We're getting updates from you as they come. Thank you so much.
Thank you, Laddie.
All right, now let's head on to other markets. Now we'll see Bitcoin price started another decline below the 20,000 support zone. It's happening all over again. We're seeing the fear greed index in the market at 11 points. Still extreme fear in the crypto space, showing sentiment in the market right now. We have it there, 11 points. You see the market cap, $872 billion, way below the $1 trillion mark. And it's down by 0.07%. We see 24-hour volume traded, $75 billion, up 21.51%, and Bitcoin dominance sitting at 42.58%. Let's look at the price of Bitcoin now, below 20K, $19,425, down 2.81%. Volume traded in Bitcoin, $32.61 billion. And we see Ethereum there still holding on to that $1,000 mark. Could lose it today, but we'll be tracking to see how that goes. We've seen just Bitcoin and Ethereum in the red this morning, but some altcoins looking not too bad. It's single-digit gains like BNB there, $219. All right, let's bring in Michael and Naji now. Join us on the show. Great to have you, Michael. Happy Friday. Hello, Michael. All right, we'll try and get Michael back on there. Let's look at the top ultimate market cap there. We see BNB there up 3.31%, XRP down about 0.96%. All right, let's see if we have Michael back now. Hello, Michael. Hello, Michael. Michael, can you hear me?
Yes, I can hear you. Good morning, Letty.
Great. We'll have you now, Michael. So let's talk about the SEC, the U.S. rejecting a Bitcoin ETF for the opted time and, lawsuits being filed by the applicants. How's this impacting the market?
Yeah, so this is now almost like the 30th. It's been a lot of times the SEC has, the U.S. Securities Exchange Commission has basically come down and said that they're not going to approve any spot Bitcoin applications because of certain things they cite, such as Tether fraud and basically just overall a lackadaisical structure in the crypto market, which crypto proponents have said that we've tried to clean up and we've tried to present a better picture. And if you see what happened with the Three Arrows Capital implosion, a fund managing $18 billion going underwater, that's because the SEC didn't act. There was a 25-30% discount currently right now for the GBTC Grayscale Bitcoin Trust. And that's because it's not an ETF. It's not open. You can't close in and out of positions. It's a closed fund. So you've seen the inaction of the SEC result in a company like Three Arrows Capital having to arb out the inefficiency in the market and ended up blowing up and wiping out tons of retail investors. And so you've seen people decimated because of the inaction of the SEC. And I think that's going to be a big part of their case. There is no reason for spot ETF not to exist in the US. It exists in Canada. Europe is going to have a second one in the next month. There's a bunch of countries that also have ETP products as well. The US is just trying to be this hard phenomenon because, of course, we all know they have the US hegemony on global currency. So at the end of the day, this feels like the US trying to stop something and not give it tacit approval.
Right. I wonder if the ETF will ever be approved in the U.S. But we're seeing Bitcoin there losing that $20,000 mark again. What are you seeing for price movement next week?
So I think a lot of people have been calling for 10K. I think the markets like to surprise people. And what I mean by that is we're seeing inflation kind of topping out here. So you're going to see in the next 2 to 3 months in the U.S., you're going to see 8%, maybe even a 9% inflation. But ultimately, that should top out, and then you should see the demand destruction. That's when the layoffs come. That's when the recessions come. That's when the economy starts to shrink. But at that case, people think Bitcoin goes to 10K. Might not be the case. Bitcoin fair value, I remember 2017, 2018, what felt natural was $3,000 to $9,000, because people could just scoop up a whole Bitcoin easily. And, at $20,000, $30,000, $40,000, you're talking about a new car, and it's not something people, could just go out and buy. So at the end of the day, a price of $3,000 to $9,000 for a single Bitcoin is more fair value of like what it's traded at in the past, excluding all that monetary stimulus the Fed pumped in 2020, 2021. I think, between $3,000 to $9,000 seems like fair value for Bitcoin.
Right. All right, Michael, thank you so much. We'll see if Bitcoin will actually decouple from most of this risk assets. We're seeing it following those equities market closely at this point. Thank you so much, Michael. Enjoy your weekend.
Thank you, Eddie. You too.
All right, that's it for the markets, and that's it for the program this week. Thank you so much for watching. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Enjoy the weekend.